Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday afternoon. Hey guys, happy Friday.
Happy Friday.
Happy Friday. Happy Friday.
How is it going? How was everyone's Friday?
It's good. I missed you guys last week. We all took off for 4th of July.
Yes.
It was nice. I think I got a little bit of a tan.
Jealous? Yeah.
What
We,
about
we
you
saw
guys?
no sun in DC. It was very hot and then like thunderstorms, America 250. But yeah, it was good. It was fun.
Lots of rain, and I
Or
didn't
what'd you
get
get up to?
the fireworks. I was trying to see the fireworks on the National Mall, and we got kicked out by the Secret Service, and then we tried to get back in, and the lines were just insanely long. The whole event was pretty badly organized in terms of just like figuring out where to go, knowing where to go, and anybody who was in any power to tell you where to go didn't know where they should tell you to go. So essentially, that's how my 4th of July was. It was a lot of walking around the streets of
They
DC
didn't know who you were?
in the rain. No, no, they didn't. They didn't
You should have
recognize my
said,
face from the bus,
have you seen my
apparently.
Twitter? Yeah.
But we saw the
Literally.
fireworks at the end from the rooftop at my sister and her husband's apartment. So that was fine, I guess. But
Very
Yeah,
nice.
I will say like a covered rooftop in DC was not a bad place to be.
yeah,
Maybe 251 will be better, but I know, Eleanor, we only have you for a bit because you got a flight to catch. So bring us to the headlines.
yeah. So let's get right into it. I guess we can start with a non-crypto headline, but crypto and prediction markets always seem to overlap in our world today. So Judge Torres was the lead judge on the Ripple case. That's how I got into covering crypto. You guys know this, but that was she was the big sort of name on everyone's mind when we were talking about Ripple SEC back in 2020. And she's now covering Kalshi, or she's presiding over a Kalshi case in the Southern District of New York, and she just denied the exchange a preliminary injunction and basically has said, okay, this case can go to motion to proceed, which is like the next step. Gerald, you would be able to explain this a heck of a lot better than I could. But essentially, why it's important is that she found that New York gambling laws, when applied to Kalshi's sports event contracts, are not preempted by the Commodity Exchange Act. And this is the conversation we've been having a lot here on the show about federal preemption versus state. Who has jurisdiction? The CFTC really wants jurisdiction over these prediction markets, and Kalshi went to court to say, hey, we believe the CFTC is our regulator, not the states. Judge Torres said they did not find enough, they did not provide enough of an argument for her to find that they would have a sound footing. So she said, nope, you guys, we're going to proceed to motion to dismiss. And then actually Kalshi, within hours, appealed to the Second Circuit. So that's the story there.
Yeah. I think this is just another reminder that the federal regulation doesn't automatically wipe out that state authority. That's the beautiful lay of the land in the US. And even if Kalshi is CFTC regulated, or, the states are still kind of arguing, they can enforce their own laws here. But I guess like the bigger question maybe I would have here is like, it's not just like who wins the case, but whether or not prediction markets do get treated either like financial products, sports books, a mix of the two, their own category. Gerald, what's the legal take?
The legal take. So this first of all, like this is also a reminder that like the gears in court systems move slowly, and as Eleanor knows from covering the Ripple trial, like you don't usually get a win or a loss kind of day one. So they immediately appealed. I think the legal basis that Judge Torres used was interesting, where she kind of referenced like the public good and the protection aspects of state gambling laws, talking about social welfare and addiction and a bunch of other things that mean that there is some kind of necessity for oversight and like a public interest in taking a closer look at this. I don't know that it's necessarily, and I was telling you guys this a bit earlier, I don't necessarily know that it's bad for Kalshi. It's just not as good as it could have been for Kalshi, to get this over with and be like, yeah, we're good to go. Preemption reigns, and on to the next thing. The other thing that I've started to notice is, we talked about this a lot in covering like stable coins and the banks. is you can fight things out in court. You can, look at legislation. Obviously, this is a little different than something that would be included in Clarity. But one of the other things that is happening is a lot of sports books are now starting to try to cover prediction markets. So I think I saw an ad for Pandl the other day talking about up-down prediction markets. I think a lot in the gaming industry probably know that there's a ton of consumer demand for these like binary output kind of sorts of contracts. And the CFTC, I'm sure, is going to stay very on this. I know Chair Seelig is very busy, and hopefully we'll get a chance to sit down with him in the not too distant future and talk about all this. But the other fight that is kind of happening tangentially is, of course, like the CME and perpetual futures. So I know that the CFTC is going to remain busy, but we'll see where it goes from here. Obviously, the ultimate sort of outcome here after you go through these appeals could be potentially Supreme Court, and it would be interesting to see this court look at an issue like this, because they do seem in a lot of ways to be supporting more federal government positions, and there are obviously 6 of the justices are conservative now, so we'll see where this initially ends up. Hopefully, though, I think what the industry would love to avoid is like a 5-year battle over this, which a federal court case can easily turn into. So
That's what
we'll have
Ripple
to see where it
got.
goes from here. Yeah.
5 years.
We'll see. Yeah.
Did you see that Jenner and Block, who was CME's law firm representing them in the case against the CFTC, they withdrew due to
I
conflict?
saw. I think that was a scoop. I don't know.
What's a scoop?
Yeah, but yeah,
I did not get that
was pretty
scoop,
interesting.
but I did
Yeah.
see the scoop.
Yeah. So interesting. There's all kinds of reasons that can happen. I think I saw some speculation that it could have been a conflict of interest
That's what
for
it was.
them, but which would mean that they were representing other clients in the space whose interests were adverse to the positions that they were arguing for. But yeah, we'll see how it goes.
Yeah. Well, staying with the sort of regulatory theme here, we saw a new agenda from the SEC this week. They released its updated regulatory agenda, and it included a target timeline for Reg Crypto. And if you remember Reg Crypto, there's so many something crypto or crypto something, because it's like Project Crypto from the SEC was sort of the thing that Paul Atkins came out with in the beginning of his tenure, and that was basically to give much more attention to crypto and kind of put it on the map from the SEC perspective. And then the CFTC came in, Chair Seelig, they made it a joint venture. But Reg Crypto was something that came out in the March guidance that came out from both agencies. Is a potential rulemaking that could create fundraising exemptions for certain crypto products, establish a safe harbor for issuers, and allow limited fundraising under existing SEC rules. So I think in lieu of clarity and whatever ends up happening with that, a lot of participants in the space are looking forward to rollouts like these, because they will be able to do more things under these guidelines. So could be released as soon as this month is what I read.
Yeah, I think I was taking a look at it. There's over 2-3 dozen agenda stage of rulemakings there. So I think crypto assets is the 4th or 5th on the list. And I mean, it kind of just goes back to how it's night and day, and what we've seen from the previous administration and previous SEC to where we are today, and how the industry has been asking for, workable registration pathways, safe harbors, et cetera. And so hopefully these rules kind of come into play here on the agenda front.
Yeah, and I'll add that the focus is obviously crypto, but as Jackie mentioned, there are a lot of different areas that they're trying to tackle here. I think we've talked before. There was a big focus several years ago on some kind of update or reform to the Jobs Act, which is what created Reg CF, Reg A plus, all these other kind of fundraising mechanisms for more people to participate in markets. That's always been a big component of crypto as well, as being more inclusive, having better access to capital markets. We're obviously seeing, I guess from a legal perspective, this makes a lot of sense. We haven't updated those laws in a decade. and things change. And then on the other side, you're seeing from a market participant side, we're going to have probably $3 trillion plus IPOs this year. And so even when we were covering kind of like the SpaceX IPO, it was, companies can now stay private like essentially indefinitely. And the goal of an IPO has never been to kind of dump on retail. There's a component of that kind of built into the mechanics of IPO where your pricing such that you want it to bump, and then there's lockups and all kinds of other mechanics that are supposed to protect retail investors. But if I can raise $500 billion for my startup, like I never really need to go to the public markets. I think I was looking at a stat the other day, and it was just the IPO pricings of like Amazon and Apple. And I want to say it was like just in the millions, and so the scale of where we got to public markets and private markets, it's good to see the SEC looking at this, with a focus on crypto, trying to create that safe harbor that the industry has been talking about for a long, long time. And hopefully we'll get some great industry participation from some of these like requests and from the rulemaking period. So excited to see things keep moving over there.
Yeah.
And Eleanor, what's your take?
Well, I was going to say to your point about other things, the quarterly reporting rule is also in there, I believe, and that is a push by the SEC to try and get rid of the rule for public companies to report their earnings every quarter. And that's received a lot of pushback from certain factions of the market, including Better Markets, which is a financial watchdog, which will kind of feed into our next story here. The CEO of Better Markets, Dennis Kelleher, has been on Twitter this week criticizing a potential nominee for the SEC commission, which was interesting in two aspects, right? I mean, it received a lot of attention from people in the crypto industry. And number two, it was kind of the first time we'd heard that Christy Goldsmith Romero, who's a former CFTC commissioner, she was also up for chair of the FDIC sort of in the final days of the Biden administration, was being potentially considered for a role on the SEC commission. So there was no real public reporting around that, no public statements. And Dennis Kelleher came out with this statement on Better Markets blog and basically blasted Goldsmith Morero, calling her unqualified. And a lot of the crypto industry was pointing back to 2 years ago when Better Markets came out and supported her, called her highly qualified for her position at the FDIC. So there was definitely some drama on Twitter this week regarding that, but then kind of speaks to the broader theme of, I think, now the conversation with clarity moving forward, like, are we going to see any nominations for these open minority seats that, both sides of the aisle at this point are calling for increasingly more so these days? You might have thoughts, G.
Yeah, I think the flip-flopping is like really disappointing just from like a sort of fair assessment perspective. Like and I think to your point about the Twitter beefs, it was great to see some of the industry, and I think Alex Grieve, who we'll have to have on the show at some point, was trading shots there.
I'd love to have
very
Dennis
reasonably.
on too.
Like that's kind of, yeah, it's like pretty challenging. So I think the question for Better Markets has to be like, what do you want here? Like what exactly is the ultimate goal? Because you've supported the credibility of this person in the past. You want Democratic nominees, but not this one who you liked before, who now you don't like. It kind of goes back to this, like what will be, the position that you take. Like if there's a Dem administration in the future and, should you have someone like this nominated, like are they qualified again? Like I don't really understand the logic, behind going back and forth. And
I
I
think
also,
not every nominee is going to agree 100% of the time on 100% of the issues that you want to see moving forward. So I feel like there has to be some give and take there.
yeah, that's kind of the point, right? Like you want a variety of voices when you're considering rules. You want multiple commissioners to be able to vote. so that the record kind of reflects consensus. And it's like, I think the other sort of, as you mentioned, Eleanor, like the other thing that this stalls is a box that Dems want to see checked, right? Is that, we want more appointments, and it would be, it's been such a hang up, I think, for the administration to not have those seats filled. So it's like when you finally see movement on this, to want to be kind of handpicking people that you've supported in the past to dispute or talk about their record on. It's like it seems like more of sort of an overall stalling tactic than anything that I could really find a strong reason for. But
Yeah. I think it's also worth noting for people who don't know what Better Markets is, it's, quote, on their page, an independent, nonpartisan, nonprofit promoting the economic security, opportunity, prosperity of the American people. I didn't know that, honestly. That's why I'm sharing that with our listeners. But is that surprising that these quote unquote independent, nonpartisan organizations would take a stance like this? Like, do they often get involved?
That's a great mission statement.
Thank you. I read it exactly from their page. Yeah.
Yeah. If you look at where they've come down on which side of the aisle before, it's interesting, right? Because they have in the past, come down a certain way, and then now it's kind of seeming like, okay, well, now they've totally done a 180 on this person who they were supporting, who's a Democrat. So someone explained it to me the other day, like, this is Dem on Dem violence. So it's not entirely.
There's been a lot of that lately.
There's been a lot of that lately, yes. It's not entirely unusual for
and not for nothing, like, yeah.
Yeah.
Yeah, no, but not for nothing, these Twitter fights or Twitter beefs or, how casual we want to get with what we call them is like, they're very impactful. We've seen this happen in the past where some nominations or people that seemed so set in stone for a position really didn't end up getting it as a result of, public commentary, debates, etc. Like, we could kind of joke around about these things, but like the power of a tweet is very, very high, especially when it comes from, I think, reputable sources. And we'll see what the impact is from this.
Yeah, and I know we don't have to get too into this, but the other thing to note on this, like, Dem on Dem violence aspect is, like, the industry has really always maintained like a bipartisanship and has wanted to support Dems who are supportive of the industry. We're also talking about this on the heels of, is it Graham Plattner stepping down from the main race? There were a lot of kind of like mainstream Dems who were not super happy with his campaign to begin with. And I think there was other talk about a seat that they're trying to fill in Michigan, where you kind of have these like Mamdani-esque candidates who then unfortunately, like in the main race case, had a whole lot of personal baggage. So it's what I'm saying is it's going to be really interesting to see what the Democratic Party can get unified on going into like a pretty crucial year for them. And we've already seen in the past, I know Stand With Crypto has been big in this advocacy space, and just talking about how many voters there are in swing states who would be supportive of candidates regardless of political party if they are forward thinking on technology and innovation supporting the industry. So they're going to have to kind of figure out like what the message is here, because if you're not unified, it may not go super well for you. But yeah, it's disappointing to see that someone who was so thoroughly vetted is somehow like all of a sudden not fit. I think that's like kind of ridiculous. But
yeah, we'll see if she actually is
Nothing
on the minds of people who make the decisions, right? Because the White House came out in a letter yesterday and said, they have not heard back from Dems in their request to put names forward, suitable names forward. So, whether she has been put forward or not is also kind of a question at this point. So I'm sure there'll be more reporting to come out around that. I will say Crypto in America reached out to Christy Goldsmith Romero and she did not comment. So there's that. But very not unusual for a situation like this.
Nope.
All right. Shall we move on to Paradigm? Paradigm raised $1.2 billion for its third fund. I believe, and they expanding
Fourth.
are expanding now.
Fourth
Fourth
fund.
fund, expanding beyond. Sorry, Paradigm. They
Yeah.
are going beyond crypto, but still staying within, the crypto realm. They're not ditching crypto by any means, is what they told Bloomberg. It was their first frontier, and they want to stick with it. But they are moving into AI and to robotics, which I think is a very common theme in the space, as we have seen this year, right? AI seems to be the new shiny thing.
Yeah. I think from what I've heard from some crypto VCs, and yeah, I still do a little reporting, a little like snooping around, okay, is that essentially that these crypto VCs don't want to be perceived as crypto firms anymore. And that some of them, and I'm not speaking to Paradigm, I actually haven't spoken to Paradigm, but the fact that they're expanding beyond this kind of confirms more of what I've been hearing from other crypto VCs, is that essentially being labeled as a crypto VC has made deals harder to get into AI, biotech, robotics, healthcare, like anything that feels adjacent in the technology, fintech. It's harder for crypto VCs to get in, and maybe there's some negative connotation there. I don't know, but that's just what we've heard. And so a lot of them want to branch out and just be seen as like generalist tech VCs. And so whether or not that really ultimately affects the venture landscape on this side, I think it will, because there are less funds being launched. Less LPs are like deploying capital into the space compared to like the boom of like 2021, 2022. But that's all to say, I'm sure startups that, take venture capital money are happy to see that another massive fund came into the market. We saw Frameworks one the other week. I think that was 400 or 500 million. And then we also saw Dragonflies a month or two ago. So I think, there's a consolidation of these VCs, and we're going to continue to see that. Like, not all of these funds that have been around for 5 or 10 years will raise a new fund or even have one of a similar size from the last market cycle. Gerald, I know you also worked in the VC side of things too, right? So
Yeah,
where you got
yeah.
to take. Yeah.
There's a lot of, so I remember, I think it was 2023, Paradigm was also active in the AI space, but didn't really dedicate like a thesis. And so the way funds raised, to your point, Jackie, is you basically go around to all your existing LPs. I know Paradigm's previous funds have been doing very well. They're in Hyperliquid, Kalshi, a bunch of other huge projects, Tempo. And so their crypto investments themselves has done very well. When you're an LP looking at a fund, though, you're going to be kind of thesis driven. You're going to be like a bit macro driven. And then you're going to be looking at like what are the raw numbers. So like Paradigm, I'm actually also not sure if they're fully deployed out of Fund 3 yet. Usually you're kind
Yeah.
of you're
It
you're
kind
on
of
the tail
bleeds in a bit now.
yeah, you're on
Like,
the tail end of your investment period, and then you go out with all the metrics you have in your new thesis, and partners can change. Like there's all kinds of, obviously like Fred Ursum was such a big part of Fund 1, and then there's Matt, shout out Alex Grieve again. There's a lot of folks around the table there who have very successful track records. But the thing about like the thesis changing is, ironically, there's two parts of this. So one is, regardless of your thesis in like 2021, I was investing in like first time fund managers out of an LP fund alongside direct investments back in like 2021. And it was so easy to raise money that a lot of people who deployed capital very fast in that environment at those valuations got wiped out like quick. Because then all of a sudden deals changed and you're looking at markups like sequential fundraising over time. And if you are out of money, but the deals are cheaper, then you're kind of SOL. So it also depends on like your ability to manage capital over a long period of time. And it makes perfect sense to me that you would get into other like frontier tech types of investments because, yeah, like if you think about raising specifically on like a fintech thesis in like 2016, you probably did very well, but then fintech kind of got built into everything, right?
Yeah.
Like I think we've talked with guests on the show about this before, where it goes from embedded fintech to payments to so it just makes sense from like a broadening thesis perspective, and like we'll see how they do with that, but
Yeah.
makes sense.
All right. I know Eleanor has a flight to catch, and we have some wonderful guests coming up. So, Eleanor, thanks for hanging with us, and
All
safe
right.
travels.
Yeah,
Sounds good. See you guys next
We'll
week.
keep it moving.
All right. Bye.
Thanks.
And then there were two.
Seamless transition.
Yes, exactly. So coming up on today's show, we're going to be bringing on Zach Pandl first. He's the head of research at Grayscale Investments. He's going to break down his latest market outlook, why he believes recent changes at strategy could reduce Bitcoin's tail risks. And then we're going to bring on Eddie Zhang, the CEO of Arcus, formerly known as dYdX, to talk about the rebrand, becoming part of Robinhood. And then keeping with that theme, we're going to have on Steven Goldfeder, the CEO and co-founder of Offchain Labs, who was part of Robinhood's blockchain launch, built on it, et cetera, et cetera. We'll get into it. Anyways, let's get started here with Zach. As crypto markets look for their next catalyst, investors are weighing everything from institutional flows to corporate Bitcoin treasuries and the macro environment. Grayscale's latest research argues that one of the market's biggest risks may have just become a lot smaller. Joining us now is Zach Pandl, the head of research at Grayscale Investments. Zach, how are you?
I'm great. Hey, gang. Happy Friday. Great to be back on the pod.
Happy Friday. So we got your note from the Stack, and you recently wrote that Strategy's recent changes to its financing framework could reduce Bitcoin's tail risks and help the market find a more durable bottom. Walk us through that thesis. Why do these changes matter? And maybe it's a different take than what we're seeing on crypto Twitter timeline, which isn't always the most insightful place.
A lot of information on crypto Twitter, but you do have to sift through it for sure. Look, we are cautiously optimistic about Bitcoin at the moment and in the process of price finding a more durable bottom. We think there's been really three big things driving Bitcoin's price recently. One is strategy, which we'll talk about at length. Two is the prospects of rate hikes from the Federal Reserve. And three is the outlook for the Clarity Act, something that, of course, you cover closely on your show. We are feeling much more optimistic about strategy in particular, somewhat more optimistic about the Federal Reserve risk, and I think a little uncertain about Clarity. Again, something that you've talked about a lot on this show. Look, on strategy in particular, and I'm sure we'll get to all this in depth. There is nothing fundamentally wrong with Strategy's balance sheet. What you have here, though, is a structure that incorporates leverage and a need to manage investors' expectations over time. I think we got off track with some of the changes and also changes in markets conditions in the last few months. But the company, in our view, is doing a much better job in managing investor expectations here and shoring up confidence in its structure. I think strategy is going to be a much less significant source of Bitcoin price volatility over the coming months, and we've been encouraged by the recent steps that the company has taken.
Yeah, so Zach, I want to expand on that. One of the other takeaways you had that I think crypto Twitter may have struggled with at the time is that, strategy selling Bitcoin isn't necessarily a bearish signal. What do you think the market is misreading there? Or like, what's your thesis around kind of the rebalance that they're having to do?
I would encourage people to look at this as a situation of a levered player in the market trying to stabilize its balance sheet. So think back to, say, the 2008, 2009 financial crisis. One of the reasons that was so difficult is that leverage was coming out of the financial system, and that was driving down the value of assets. So there are some levered players, and we want to make sure that they are not forced to deleverage. And what I have seen in the last couple of weeks is clear signs that strategy will not be forced to delever. And that's why the Bitcoin sales are so important. They have the financial resources to support the dividend payments on their stretch product, on their variable rate preferred product, but they needed to demonstrate that they were going to use those financial resources, which really means selling Bitcoin to build the cash reserve to cover the dividends. And so I would encourage people to think of the Bitcoin sales, the very limited Bitcoin sales, in that context. This is not about strategy becoming a large structural seller of Bitcoin over time. This is about stabilizing a leveraged intermediary in the market, something not unique to Bitcoin, not unique to the crypto asset class. And I think the Bitcoin sales were confirmation that they are willing to use their financial resources as necessary to stabilize these structures. To me, that's a great boost for confidence in the market. And we've seen that reflected in prices with the price of STRC, the variable rate for preferred product, trading pretty well. So Bitcoin sales in this context, I think a very bullish sign, a bullish sale from a strategy in my view.
Yeah. And Zach, this is all very strategy focused, right? But then there's also, other DATs within the space. How do you kind of compare what's going on with strategy, which obviously has underlying business infrastructure, et cetera, was the OG in this kind of market compared to maybe the other digital asset treasuries that are in the market right now?
Yeah, so I would say two big things that stand out to me. First is, in most cases, there's not a lot of leverage on the balance sheets of the digital asset treasuries. So I don't think that many of them are going to be in any kind of acute pressure. They're going to decide what's in the best interest of their shareholders, whether they change the business in some way or whether they just continue to run with MNAVs or valuations that are relatively low, below the price of the crypto on their balance sheet. But there's not a lot of leverage, and so not a lot of market pressure immediately on these companies. I think that they have some timeline to reshape themselves as needed. In the longer term, though, what I would expect is fewer pure play DATs and more diversified businesses holding Bitcoin. When you look at public companies holding Bitcoin, there's sort of two types. There's companies that's mostly what they're doing. 95% plus of the market cap is the value of the Bitcoin. I consider that the digital asset treasuries. We have lots of other companies that hold Bitcoin on their balance sheet. SpaceX, of course, the most prominent recent example, the largest public company with crypto on its balance sheet, but lots of others like Coinbase or Galaxy, other players in the crypto space. That's what I expect to see, is more Bitcoin on diversified corporate balance sheets and fewer pure play DATs, with maybe a couple of exceptions like strategy, maybe some of the biggest players in the market, but fewer of the small players. I think that's where the DAT structure is going to evolve over time.
Yeah, Zach, I want to ask you, you may have touched on this a little bit in your initial response on where we are kind of on a macro scale, but one of the other things that I think people are particularly aware of in crypto more broadly is the tie to where the interest rates are going. And you tied some of the pullback that we're seeing in your note to the reaction or the expectations under the new Fed chair, Warsh. Can you tell us a little bit more about that? Like, where do you see that going, and how do you think interest rates might play into sort of the crypto environment more broadly over the next, say, like 6-12 months?
Absolutely. I think the first thing to say is that crypto is a diverse ecosystem, and there's not a straight line in all cases from changes in interest rates to the value of the assets. Like stablecoin issuers like Circle, for example, of course, make more revenue when interest rates are higher. So there are some parts of the crypto ecosystem where interest rates increasing is positive. But if we just focus on Bitcoin, which is the biggest asset in the asset class, of course, I do think that interest rates, higher interest rates, do have a fairly direct negative impact on the price of Bitcoin, as well as other assets like physical gold. Bitcoin and gold, these currencies, monetary assets that compete with fiat currencies. So when interest rates are going up on fiat currencies like the dollar, that raises the opportunity cost of holding Bitcoin and gold. So it's a headwind for our market and vice versa. So I do think that the big shift in expectations around interest rates over the last several months has been, in my view, the most important factor driving down the price of Bitcoin, and also the price of precious metals recently as well. Where are we on that story today? I think it's still a big open question. The market has about a 30% chance that the Fed will hike at its July meeting. So that's coming up pretty quick. We have a big big inflation report next week that will probably determine whether they hike or whether they don't. For crypto investors listening to your podcast, I would say, if the Federal Reserve does not hike interest rates, that is bullish for Bitcoin. Interest rate hikes are expected by the market. They're already priced in. So just remaining on hold is therefore a dovish outcome and a bullish catalyst for the market. That's how I think it's going to play out. I think they probably are not going to hike, in contrast to what is priced in. And I think that helps Bitcoin, helps physical gold, helps silver, a number of other things on the margin. But we're going to have to see how that plays out. And the next big catalyst will be the CPI report next week.
Yeah. Last thing, Zach, I know institutional participation in crypto has been growing. We talk about it a lot on this show. And then like we also talk about price action, and it wasn't always reflecting maybe the growth on one side with the other. What do you think is the biggest disconnect right now between the fundamentals you're seeing and how the market is behaving?
Well, it does look like public blockchain technology is reaching its inflection point moment. We're going to see much deeper integration with traditional finance over the coming years. I have a high conviction that that is going to translate into higher valuations for crypto assets. And I think by and large, our investor clients agree. They are looking at some of these same trends, and they see relatively low valuations or a big drawdown in the price of Bitcoin, the price of Ether, the price of Solana, and they see it as an opportunity. They want to get into the asset class at compelling entry points, and they see this as a good entry point, and they see all those fundamental trends. So we're going to see the capital come into the asset class and drive valuations, even if we have to wait a few more months. I would say that investors are being somewhat selective at the moment. And so looking at particular opportunities, a couple of things I would highlight. One is things like covered call strategies that benefit from finding a bottom in Bitcoin's price and generating yield, but maybe aren't the best way to position for a rapid takeoff. So these yield generating ideas have been popular with our investor clients recently. And then I would say particular projects that benefit from regulatory clarity or clearly have product market fit. Hyperliquid would be a very good example of that. That's getting a lot of investor attention. So most of our clients see a huge opportunity, but they're still being selective, watching the news play out, trying to be confident that Bitcoin has a bottom, choosing things like covered call strategies and select projects like Hyperliquid to position in today's market.
Zach, we love predictions. One more before we let you go. Where are we Bitcoin December of this year?
Yeah, we don't like to do price targets, but look, I would say I feel good about the market. I think we are somewhere in the, we're in the process of bottoming, and I will stick my neck out and say my best guess is that we bottomed at 58K. So I think that it's not totally clear, and things like clarity, the Fed decisions, et cetera, are going to have a role to play in seeing whether that's correct. But my best guess as of the current information is that 58K was the bottom.
Yeah, amazing. Well, thank you, Zach, so much for coming on, and we hope you're right. We'll see you soon.
My pleasure. Thank you.
All right. Next up, we will be having on Eddie Zhang, the CEO of Arcus, to talk about its rebrand from dYdX and what it means to be a part of the Robinhood ecosystem and what they're building now. Eddie, welcome on.
Hi. Hi. Can you guys hear me okay?
Yeah, of course.
Yeah, great.
It's great to see you. I mean, for people who haven't followed the transition closely, what was kind of the impetus behind this decision? We kind of want to know like the details. How long did this take from like rebrand and relaunch for dYdX into Arcus? We got a bajillion questions. Let's start there.
Yeah, definitely. I guess like the start of the story is I started a company that was trading kind of both for like meme coins and actually with perpetuals 2 years ago. And then that company was acquired last year, almost exactly a year ago. And so I, as a part of that sale, Antonio kind of agreed to do like a transition for the company itself. And around, I think, 1010 was probably, I guess, like a famous moment in perpetuals when I think we looked at kind of like the technology and kind of like the direction forward. And we kind of wanted to chart something different. And so we did a series of demos for Robinhood, I believe in November, December of last year, where we kind of tried to make like a next generation engine. And then through, I think, like the first 6 months of this year, we really solidified that approach. And a big driver, of course, was that we believe that financial rails on crypto had like a really promising future, and that onboarding kind of stocks, both in the spot asset form and in the perpetual form, was going to be like a really powerful driver of wealth creation for people. And yeah, so I think we agreed on the terms of the investment, which is all public, around March. And then we've been kind of heads down building since then, obviously leading up to the July 1st launch last week.
Yeah, amazing. Well, what does the new brand represent for you? And like, what was the strategic rationale behind joining Robinhood? I know you brought up the aspect on the stock side, but maybe like, what was the natural fit or the aha moment for you guys?
Yeah, I think like for a long time we've been talking about how we wanted to kind of like expand the user base in crypto, and how like spot was like a really big part of that. Initially when we talked about spot, it was like isolated, I think, to like crypto spot. So like most of the world's like biggest exchanges have both like spot and derivatives kind of combined on the platform. And it's like natural because like spot is like an easier to use product. It's kind of like easier for people to understand, and people kind of like graduate from that up into perpetuals. And so I think with Robinhood, we saw like a natural analogy. Like they, of course, have like a really big spot user base, which famously, they charge nothing on. They don't charge anything on stocks for buying and selling, and we actually do the same. So what we do right now is we don't charge anything on the spot product, and we believe that that will kind of like expand like the use case. So of course, kind of like I think it's like well known now, like American stocks and equities have like outperformed global for like quite a long time. And I think that like globally, kind of access to like a zero fee platform is like very weak. And so I think that was like part of what we really wanted to do is like, I think fighting for like the same pie of traders is, I guess, kind of like a zero sum game. And so we really wanted to bring on people to like American equities. I think that's really good for the US. Robinhood has like a weaker presence internationally. I think it's also well known. They have maybe their strongest market, I believe, internationally is like the UK, because it's like English speaking. It's like a natural kind of extension market. But outside of the UK, where they do have, I think, like 1 million funded accounts in that range, they don't have like substantial presence. And so we're kind of hoping that we're like a gateway, since originally our user base was much stronger in the UK and Asia. Sorry, in Europe and Asia.
Yeah, Eddie, I don't know if you're exactly the right guy to ask this, but on the Robinhood front, there's been a lot of chatter about the Robinhood chain over the last couple weeks, all the inflows, what it actually is, right? Like it's an L2 from what I understand. How does the Robinhood chain fit into all this and like the partnership for you guys?
Yeah, definitely. So I think that like we were looking for a way to offer like stocks a spot. Robinhood, of course, famously has like very deep liquidity when it comes to stocks, and they're issuing them out of the like the Bitstamp entity. And so I think that was like a really foundational part of like the chain was they wanted to kind of have access to stock tokens. Those stock tokens can be like very deep because they're kind of quoted and issued out of Robinhood's infrastructure. And that allows us to, basically like power a lot of the spot token side. I think I'm happy to kind of talk about like the other big things happening around the chain, if that's like helpful. There's been a couple, I think, interesting points. We have some analytics on, say, like TVLs and kind of what people are actually doing on chain. If that's like helpful, or people are curious about that.
Yeah,
Right, go
100%.
for it.
Yeah, I think that like the other things they launched alongside Robinhood Chain was, of course, like a substantial lending product. So like the lending product, I think it offers 7%, which is like quite substantial. The pool, I think, is like around 2/3 of TVL is like lending. That's like pretty common. I think a lot of like I guess you don't need to name names, but a lot of exchange tied blockchains have a lot of crypto lending
Right.
on them because it's like a natural evolution. The crypto kind of like lives on the centralized exchange, and then people like take it off the centralized exchange onto the associated blockchain to earn like higher yields. And that's like a good base of kind of like liquidity on the chain in TVL. So I think that's like very promising. There's also been like a lot of chatter, I think, about meme coins. There's like a couple of meme coins that maybe there's like a bit of a rotation from like Solana, where there's been like a lot of meme coin activity, to kind of Robinhood chain. Um, and we actually launched support for that yesterday because I definitely believe in kind of meeting users where they are, even if it's maybe like slightly off pieces or like slightly different than what you initially thought. So there's been a lot of activity there. And then, of course, like what we're really focused is on like on stock tokens themselves, of which that's kind of maybe like the last kind of like third of liquidity, which is pretty substantial, as well as perpetuals, which we have in beta right now. And we have like substantial TVLs there too.
I'd love to know how you'd characterize the trading activity and behaviors of users, maybe stateside versus the other markets globally? Because you have a good overview of kind of like where demand is and where people are actually transacting right now. How would you kind of characterize it? And I would imagine it's not similar between the US and then other markets because the US has some limitations.
I think you mean like across all asset classes, or specifically for like stocks or crypto, or
It's a
yeah.
good follow-up question. I would say for crypto, but then I guess now that you're within Robinhood's ecosystem, like how it bleeds into the traditional markets.
Yeah. I would say, of course, perpetuals are, like very recently legalized in the United States in like a specific form. So, of course, kind of when you think about like the global perpetuals market, it's predominantly like non-American. Um, I think that is like a like bad thing for like the US. I think that like having access to like financial products that have really high demand and starting to open up is like a really good step for the US in general. In terms of like stocks and say like stock buying and crypto buying in general, I think there's like some differences. I do think that because like the rest of the world is there's a lot more like availability, trading volumes are like much higher. But we're hoping to kind of bring that with like legalized perpetuals in the United States. And we did recently did a letter with the CFTC, and so I think that's recently been published on our Twitter about like how we're working with them and what our opinion is on kind of the path forward on regulating decentralized perpetuals in the United States. Stock token trading activity, I think, is different market to market. I would say that, like, I believe the stat in the US that Vlad from Robinhood recently tweeted out is like 40 or 50% of American households own stocks. That percentage is substantially smaller, of course, internationally. And so we're kind of like hoping that some of the work that we're doing can raise that number. And then in terms of like actual like trading activity, I think it like varies very heavily market to market. So like, historically we've seen kind of like for example, East Asian countries have like substantially higher trading volume activity per like user than the US, and Europe is like, like more similar to the United States.
Yeah, amazing. Well, Eddie, congrats to the team on the new launch for Arcus, and we'd love to have you back on sometime soon to talk more about it.
Great.
Great.
Thank you so much for having me on. All right.
Yeah.
Good seeing you again.
Yes, you too. All right. Following that guest, we're going to go a bit further into the Robinhood conversation as the company is bringing tokenized assets on chain. We talked through that with Eddie a bit. And now they also have the Robinhood chain, which is a part of being built on top of Arbitrum's technology. I'm not going to go too into the weeds, but joining us now is Steven Goldfeder, the CEO and co-founder of Offchain Labs, which is the development team behind Arbitrum. Steven, welcome on.
Thank you. Great to be here.
Great to have you. So obviously Robinhood is one of the most recognizable investing apps in the US. I saw one of your tweets from this week where you essentially talked about enterprise adoption and what this means for Arbitrum. Can you kind of explain what this kind of enables putting together the maybe mainstream trading audience with a crypto audience and how this kind of impacts the industry and Arbitrum more specifically? Yeah.
Absolutely. So yeah, I think this is good for the industry. It's good for Robinhood. It's good for Ethereum, and definitely good for Arbitrum as well. So in the tweet here, what I'm talking about is we're seeing a flurry of enterprise adoption. I think Robinhood is probably the most significant example to date, but it's a mark of a trend, definitely not an outlier. And the way that Arbitrum has architected our technology stack and our licensing and our business model is that we, of course, have Arbitrum One, which is the marquee chain of the ecosystem today, but we also have the ability for others to launch L2s using our technology, and Robinhood is probably the best example of that. And the way that we've set this up, it's funny because like the market is kind of beginning to understand this now, although it's been in place for years, but there's now like an actual real large customer using it, is that the Arbitrum ecosystem shares gets a 10% revenue share with L2s that launch on the Arbitrum technology stack. So it's a win-win for everyone. And like I said, I think Robinhood is the best example to date. I think Robinhood is going to be fantastically successful, but it's also the mark of an early mover of a trend where we're seeing kind of this strange dichotomy where the market seems in a slump on the one hand, but in institutional adoption and just general adoption of the chain of blockchain technology, the thing we've been waiting for years, is I would say at all-time highs.
Steven, I have to ask one. I know we're going to talk a lot more about what's going on right now, but if my sources are correct, I think Offchain started out as a research project at Princeton. Is that right? And then yeah, I'm sure there's some lore there. And then I just want to go like, how do you go from that to Robinhood? Like, it's got to be quite a journey.
Absolutely, yes. This is very much a research project. In fact, if it was, I should say, if you go back to YouTube, once upon a time I would say search for Arbitrum on YouTube, you'll find one video. But now I'll say if you go back to the very, very first video mention of Arbitrum on YouTube, you'll find a fall 2014 class semester project roundup video on YouTube. And this was the very early first, I think, public record of Arbitrum. And actually, this even predates my involvement. I was in a class doing other things on custody and threshold signature wallet MPC. But Ed, my co-founder, was a professor at Princeton at the time, and he led an undergraduate project where they said, hey, there's this thing called smart contracts, which, by the way, that date, fall 2014 semester, Ethereum went live July of 2015. So there literally was no smart contract platform that existed yet, but the theory was, remember, we were in the university. So it was, well, there's this theoretical thing that's been written about, right? The papers were in, where there are these smart contracts. They seem really powerful. And we have this hunch, though, that if they actually hit scale, which, hey, they might, because the technology is super interesting, they're not actually going to work well. They're not going to scale. And that's where the early roots of Arbitrum came to be. Ed went off to the White House for 2 years. He was a deputy CTO under President Obama. He came back to Princeton at the end of 2017. And that's when Harry and I knocked on Ed's door and said, hey, Ed, remember that Arbitrum project? Well, now it's 2 years later. Ethereum is alive. And well, we thought we're beginning to see some scaling issues. That was like the CryptoKitties era, if you will. And we're like, yeah, we need to actually build scaling technology. And that was the rebirth of Arbitrum, which continued in the academic realm for about 2 years. And then we moved to commercial realm when I graduated in 2018.
Yeah, it's definitely a good origin story. And I think Princeton maybe should put you guys up on a wall for that. But I think you brought up before Ethereum. And I wanted to talk to you about that because I know AJ Warner, who's on your team, tweeted something about this. And so did Hayden Adams from Uniswap. And essentially, like, crypto has always been trying to attract a new way of users. And then the integration of ETH here, as AJ wrote, is that it kind of is a throughput through Robinhood's platform, and it's a bullish catalyst for the asset. Kind of explain that to me, maybe from your perspective too. Does partnering with companies like Robinhood kind of become more important than to onboard users directly into crypto and also help maybe the asset class?
Absolutely. So if you ask yourself, what is going to be the catalyst? There's been this meme for a while to get, the next billion users into crypto. The catalyst for that is not going to be to get 1 billion users to sign up for a MetaMask account or whatever your favorite wallet is, store their seed phrase, and then start, figuring out how to connect to an RPC. That's not actually how this is going to work. It's definitely going to be through existing distribution channels, right? We can fast track that. We can get access to Robinhood's tens of millions of users quickly. And that is definitely the best way that we're going to grow. And when it comes to Ethereum in particular, Ethereum has something that no other L1 can offer. When Robinhood was choosing, if you take it as a premise that many institutions today want to launch their own blockchain, and we see this across so many institutions. Robinhood is an example, Circle is an example, Stripe's an example, Coinbase is an example, and that's the starting point. Then you really only have two choices. You can launch your own layer 1, you can launch your own net new chain, or you can launch as an Ethereum layer 2. Robinhood and Coinbase have chose the Ethereum layer 2 route. Stripe and Circle, in my example, have chose the layer 1 route. But when you actually zoom out there, you say, well, if you want to win over institutions, alternative L1s don't really have a horse in this race. There is nothing that they can do to win over an institution that, as a starting point, wants to have its own chain. Ethereum, via the layer 2 narrative, via the layer 2 offering, actually can win and is winning this today. And all the more so when it comes, you mentioned like a bullish catalyst for the asset. Robinhood is actually, the gas in the chain is collected in ETH. Most of the trading pairs in the chain are collected in ETH. So in every single way, this is a win for ETH. And I think that though everyone in the Ethereum ecosystem really needs to appreciate this and understand this. Robinhood wasn't saying, and none of these, neither was Circle, Stripe, Coinbase saying, oh, should I launch as an Ethereum layer 1 or should I launch at an L2, right? That's not the fight that's going on today. It's, should I launch my chain as an L1 or should I launch as an Ethereum layer 2, in this case on the Arbitrum platform? And we're seeing the most success actually in the Ethereum layer 2s. And I think it's extremely bullish for Ethereum, the network, and the asset.
Yeah, Stephen, I want to ask about just the traditional, when we're talking through this, one of the phrases that's been used in the industry for a long time has been bury the blockchain, right? And so you're talking about a lot of these like academic sort of arguments and like very interesting, I think points that the industry has worked through. Robinhood has a history of making trading feel like almost too simple. I think they've gotten criticized in the past for making trading like too simple. How do you see kind of the foundational UX of platforms like Robinhood impacting, and you kind of just covered this with how this may impact Ethereum, but just broader adoption where, what we talk to a lot of founders about is like having invisible rails, right? But still having the underlying sort of asset and the network underneath. Like, tell me more about like where you see that going.
Yeah, invisible rails are a good thing if we're going for as mainstream adoption. When I, open my phone and I open DoorDash and order some food, I don't think about, the intricacies of the network stack underneath and said, oh, well, there's this packet going on. I just think about, I'm hungry and I'm getting food and my food shows up at my door. And that's the experience that we need to have for trading as well, right? So I mentioned before that this is the way we grow to 1 billion users. But even more than the like technical way of, I think this is good for distribution, there definitely aren't 1 billion users today that actually want to back up their seed phrase and download their wallet and deal with the intricacies and choose their network and go to their block explorer. There aren't 1 billion users today that want to do that. And that's okay. That's not a bad thing. And forever the question has been in crypto, it's like, okay, fine, but can this technology actually provide value for users who don't want to do that? Is this technology only for the very technical user, or can it actually provide value for all users, whether or not they want that? And I think Robinhood is very much answering that question today in the affirmative, because they are rolling out their stock tokens in 120 countries. They've already tokenized over 2,000 assets in Arbitrum 1, even before the launch of this blockchain. And if you go on the Robinhood Europe app today and you say, I want to buy a share of Apple, you're going to get the exact same experiences in the American app from a UX flow. What you're actually going to get is a tokenized asset in Arbitrum 1. So they're fueling their international expansion. And it comes with really nice user benefits as well. 24/7 trading is a massive improvement for users. Really fast settlement. This is a big catalyst, I think, for tokenized asset growth in general. If you're using the old system, often you'll have to wait 1 to 5 days to get your assets out. And that's a lot of lost interest, particularly for people moving money in size. Fast, nearly instant stablecoin settlement. There are a lot of benefits for users using this technology as well. And so what we're seeing is your average user who doesn't know what a wallet is, they might not care even which network they're using. Like, they don't care about any of these details, but they're getting the benefit of this technology. And the example that I like to give is when I go to YouTube, again, we're on YouTube again, and I looking for a cat video, imagine that I got like a pop-up that said, oh, would you like to watch this video on AWS or GCP today? And your average user just doesn't care. And that's okay. AWS is still an extremely important product, but it doesn't have to always be a user-facing product. And I think Robinhood is showing that millions of users, everyone in the world actually, can get the benefits of crypto, real, tangible benefits, without having to deal with the historical difficulties or pain points of using and onboarding to the technology.
Yeah. So last thing then, Stephen, do you kind of see this as like the step forward for, these traditional apps, brokerages, fintech apps, et cetera, to really start integrating with blockchain technology? And to your point, it'll just be part of the future of all these financial apps?
Absolutely. I think if you look, and Vlad from Robinhood said this really well, if you look at the history of stocks, we started off on pen, paper, and filing cabinet, eventually moved to on-prem, mainframe computing, eventually moved to the cloud, and crypto is just the next part of that iteration. The next generation of this technology is definitely on crypto rails. And I think we're seeing this not just with Robinhood, but it's a theme that we're seeing. We call it the programmable economy. The economy is becoming programmable. Markets are becoming programmable. You can launch a market today, like you can launch an app, and things that used to be manual processes are now automated, programmable, and it's just a much, much better experience for users and institutions alike. And I think we're going to see this trend continue, and this is really only just the beginning.
I love it. Amazing. Well, Stephen, thank you so much for coming on today. Great to see you.
Thanks for having me.
Thanks, Stephen.
All
And
right.
that's the week. That's Friday.
Yes. All right. Well, thank you to everyone for listening in. We will be back again next week. We will be at the Injective Summit, and we're going to air that for the Friday show, just an FYI, but we will see you there.
Yep. Looking forward to it. Thanks, guys.